We're seeing much of this already. How do we track capital outflows in Hong Kong? What are we seeing?
Good morning. So it's kind of tricky to actually track how capital is moving in and out of Hong Kong. The best way to do this is to look at trends in the currency. It is a pegged currency, but we do look at changes in aggregate balance, interbank liquidity, that kind of stuff in the money market. That shows, whether people are pulling out. There was a report also on local media this morning saying locals were queuing up at banks to exchange their Hong Kong dollars for US dollars, and actually banks ran out of US dollars, so people were forced to change it into pounds and other currencies. So there are kind of anecdotal ways to track this.
We continue to see the rising tensions between China and the US. What stocks are worth watching at this point in time?
So remember, the one kind of top play in the Chinese stock market for this was the rare earths. These are metals that China produces. 70% of the output comes from China, and there was speculation that it could be used as a bargaining chip in the U.S.-China trade war. So these stocks have actually done really well in May, and they're a good barometer of how heated tensions are. It's probably the best way to track this in the equity market.
So what does June hold then?
So what we're watching for June, what China's central bank has done in May is really kind of unleashed its liquidity prowess, and in June the concern is that we have quite a lot of this funding maturing, about 380 billion US dollars of funds maturing in the financial system. Now, what we need is the central bank to do more. There is kind of talk of potentially a triple R cut as soon as today. The central bank likes to do these things on Friday afternoons, but the liquidity gap is actually a concern. That's already showing in the repo market in China, borrowing costs really rising there, and government bonds having a pretty awful May. So we would need the central bank to ease these liquidity concerns in June. That's the major factor to look out for next month.
What are we seeing in terms of liquidity concerns in Hong Kong?
So liquidity has been quite tight for a while, and that's partly a result of what the HKMA, the de facto central bank here, has done to defend the currency peg when it was on the weekend of the trading ban. So with liquidity so tight, that's what's been supporting the currency now, and that's why it's on the strong end of the peg here. Anything that can mop up liquidity, so big Chinese IPOs, we have NetEase and JD.com are likely to list in June. That's going to increase the demand for cash and probably cause a spike in interbank rates here in HIBOR, which is if the HKMA doesn't do anything, if it doesn't need to replenish this pool of liquidity, we could see a very volatile currency.